Welcome to this edition of Mindset Profits. One of the question and requests that I've been getting quite a lot of is we want to learn about investing. You've been talking about increasing earnings. You've been talking about more efficient allocation and management of your money, but you've never talked about investing. My investing has always been passive. I was with unit trusts, which are safe and don't need me to go in and manage. But young man is telling me, brothers, there are options out here. I'm coming to educate you, and he's young and intentionally so, because I want every young person who gets to watch this episode to understand that you don't have to have these things to get started. You can start young. You can start when you have time, and there's a huge benefit to starting when you're young. So, Sifanele, how are you?
I'm well, my brother. How are you? Again,
I've said you are the pro that's coming to drop some serious value and some serious education.
I hope I do. Thank you so much for having me on this platform. I really appreciate it.
Cool stuff, man. So, you were saying just you read something interesting about Warren Buffett. I think when we talk investing, he's one of those role model in this sphere of this topic.
I think, yeah, he is. If you think about it, he's one of the people that started at a very young age. Mm-hmm. He started reading books when he was 11 years old about investing. And if you read his history, you'll find that he read almost every investing book he could get his hands on. And they say that he accumulated most or 90% of his wealth after 50 years old. So can you imagine starting investing from 11 and only making 100 billion or making 90% of your money in your 50s by age 50? And that tells you one thing, is that if you do something consistently, eventually you'll become a pro in it.
How did you get started so early? Because there are many young people out there that are not even thinking about investing anything in any facility.
My journey started in 2010. I was sitting at in front of my computer where I used to work. I was employed full time, and I started because I'd heard of shares in a traditional way of shares where you are given ordinary shares in a company. But then I was like, how can I get these shares? Because I don't have a skill. From the reading that I got was that, actually I had read also, my grandfather gave me a book, Rich Dad Poor Dad.
Okay.
Yeah, he gave me that book. And he actually gave almost each and every one of us to say, read this book. This is the book you must read. And then I learned that there's shares. And then I was like, okay, so there's shares. How can I get these shares? And then from my own reading as well, then I figured out that you could invest. But then all the information I could find then was US-based. It was in dollars. You can invest $250 a month. And I was like, I'm not anywhere near that. I'm not even earning $250, an equivalent of $250 then. And I was like, so how can I do this? And time went by, and then I actually, for some reason, I backtracked because I was of the impression that I needed a lot of money to invest, and that's the information that was available.
What many people think and believe.
True. Yes. I mean, and that's the information that was available to me, only to find that actually I was wrong. I could actually even buy a fraction of shares, because if a share costs $250 each per share, you can buy a fraction of that. So and had I done that,
you could have started
much earlier. But I'm grateful that I started, because what's important is you starting something.
What got you started, though? You said you learned this, you got a bit of fear or misconception, and you stopped for a while.
So what got me started was in 2016. I met a very good friend of mine. He was a colleague then, and he told me that, Sifa, they call me Sifa for some reason. My name is Sifanele, and Joe, people call me Sifa, and then that's how I became Sifa. While in Durban, I was Sfa. So and then he says, Sifa, I'm investing in shares. Are you interested? And then I'm investing through a bank. I'm like, eh? Through a bank? How are you doing it? And then he started showing me how he's investing. Then from there, I started. I bought, but then one thing that happened, interesting thing, which was a learning curve for me. I bought into a stock that I thought was cheap, but then that was me paying my school fees because that company, it was they were manufacturing furniture for the most part. They were busy. They were in the furniture business, and I bought into that stock. I saw green. There's colors that are very important when you invest, and there's one color that is that makes you happy, and it's the color green. And then things happened, and then it just went dive down.
When you're talking about these colors, where are we seeing them? In the banking app? Or
so you see them in your banking app or in your trading app as well, or in your the app where you're invested in, because there's platforms where you can invest shares. One of them is equities. That's one of the platforms I would say was a blessing to many of us, because
Easy equities.
It was a blessing to many of us because it allowed many that couldn't invest. Because before how we used to invest in shares, we still do it now, but it's now the ones that have got a lot of money who do that. You used to call. You could even call. Have a broker, and then the broker would facilitate the trading for you at the JSE. You would call them and say, "I want to place an order on these shares. This is how much I want to invest. These are the shares I want to buy into." And then Easy Equities was like, "Nope, we are in a new era now. Let's do this thing."
That's interesting. All right, so let's educate someone who will have heard you talk about the banking part.
Yeah.
And say, I have a bank account, but I've never seen this trading thing. How did your friend break it down, and what kind of access can someone get using?
That's where the trick is he already understood what was happening. He could analyze. He could do what we call trading. And also with banks, there are banks that would give you a trading platform as well, because you can either buy shares or trade shares. There's a difference between the two, where when you buy, you're buying for keeps. You are just buying so that you can withdraw them later. You're buying them through a broker. The broker will facilitate the buying. They will store them for you there. And then there's trading. So when you trade shares is when you trade the price movement of a share. I think he started with that part where he was trading shares. And then he gave me some insight to say, okay, these are the shares that I'm buying that are available to the bank. And then in the banking app, one of the banks that has a banking app that has got shares that I know of is FNB. There is you can open a share trading account with them. There's a specific account that you have to open, and then you can either choose to buy shares by yourself, or you can give them the right to buy shares on your behalf. So they can do that as well.
Okay.
Yeah.
Yeah, I think Standard Bank as well.
Yes, I think, yeah.
I'm sure the other banks do.
Exactly, yeah.
It's just maybe we haven't done the investigation on...
Definitely, yes.
On their side. But there's something that you said at the start. You said you paid a lot of school fees upfront with the first shares that you bought. If that was the case, do you remember how much money you lost?
It wasn't a lot of money. It might have been a lot for someone who was starting. I think I lost about 3 grand from that 3,000 rands from that.
But at the time, your salary was.
Yeah, I was dinging. My salary was,
not too far.
Was not too far from there. And yeah, so it was a lot of school fees. And one thing I learned about that was, when you invest in shares, you just don't take someone's word for it. And especially if you are going to go the equities route, because you also have a couple of ways you can trade shares. You can buy individual stocks, you can buy individual shares. A company A, I want to buy shares for FNB, I can do that. But the trick with that is, you need to understand there's a lot of criteria that you have to use for you to actually get that right, because one of the things, you need to understand financial statements. You need to be able to read financial statements. What do they mean?
If you're going to buy straight shares in a company.
Yes, yeah. I mean, if company A makes 100,000 rands profit, does that guarantee that they will make the same profit the following year? How much profit have they made in the past 5 years? Did they just jump because there was COVID, and then they made a lot of money, and then everything goes down again? So with that comes a lot of analysis, technical analysis as well.
Debt and balance sheet and stuff.
Yes, debt and balance sheet. You have to know what does it mean if a company has negative values.
So if you're buying shares straight up, then that's a more technical approach.
Yes, that's a more technical
and
approach.
You need to know a whole lot more.
You need to
so for someone who says, I'm not that technical, where do I start then? What are my options?
You have options. Your options as someone who just wants to start, and there's what we call basket shares or a basket of shares. They're usually called ETFs. One can just invest in those, and the good thing about that is you have. Maybe you've heard of Citrix.
Yeah,
I heard of Citrix when I was 20. The past when I was 20, I heard of Citrix, but I didn't know how they operated. I didn't know. You just hear someone says, no, I've got this thing, Citrix. Buy Citrix, Citrix what, and then I was like, okay, yeah. So what do they do? I don't know, but they make your money grow. That's all they. That's what a lot of people knew, is that Citrix was responsible for making money grow, and so only later did when I started understanding about shares, that they actually have a lot of ETFs as well. They have ETFs like your top 40, your Citrix top 40. You might have heard of it on the news.
Explain ETF to someone who's
so
never
Citrix
heard
top 40 is the top 40 performing companies in South Africa.
So they group them together.
So they take all the performing companies. You'd find banks in there, in top performing companies in the health sector. You find top performing companies in the tech sector, and then there's what you call blue chip companies as well. So blue chip companies are those companies that have been in the game for a longer period of time, and I think they've got a proven record that they are solid. Their balance sheet is good. They've been doing this thing. If a company is selling food, people will always eat. There's one thing my father used to say about agriculture. He used to say, I love farming. And I'm like, why do you love something so much? And he says, because no matter who you are, whether you're a president, you are a child, you are a professional, you have to eat.
You can keep the number simple. If I take 1,000 rands today and invest it into that fund, what does it mean for me? What do I own exactly?
It means that you own a fraction of a share from 40 companies. And then you're investing 1,000 rand. It means you're owning a share in each and every of those companies.
Also, that's the index fund.
Yes, that's the index fund. So that's something like that. Yes.
And I can keep my money there passively and not worry about it.
That is what we advise. Keep it there and and let it grow. Watch it grow. Because indexes have proven that growth, as small as it is, they've shown growth. If you look at S&P 500 for an example, it's shown growth. I mean, if you're getting,
do you know the average over the past decade?
Over the past decade, even though I'm not too sure about it. But I know that last year it grew around 8%. I'm not mistaken, yes, around 8%. So
that's fair.
It's fair. That's good investment. I mean, that's good growth. If you look into the compounding effect, because when you invest, it's not like you don't expect results immediately. If you plant something in your garden, you don't go and check every day. What's happening? Are you growing? Why are you not growing? Why are you not out of the soil? You wait until a certain time. You give it a period of time. If they say 2 weeks for it to germinate, the seed to germinate, you'll go and check after 2 weeks. And if it happens, because this could also happens in investments, is that you may have multiple investments, and not all investments will give you returns immediately or at the same time. Even
or some will work, some will not, some will delay, longer, some will work faster.
Will be faster. The biggest mistake we can make, or we make with investments, is that we think that when I buy shares, they should grow immediately. I should see a 50% increase. I should see green. I shouldn't see red. The moment I see red, then immediately I want to sell, which is not investing. You are basically trading shares, and if that's why indexes are usually the safest, because if one company doesn't do well, if Apple doesn't do well in the Nasdaq 100, Amazon will do well.
So your money is always
Tesla will
just
do well. Yes.
balancing
So your
out.
money is balanced. Yeah. So it gives you that freedom or that allowance of.
So basically, the more technical one, where you actually buy the shares of that specific company, is the one that has the highest upside. You can get a lot of profit if the company does well,
Yes, you can.
and
You
a
can,
lot of
definitely, yeah.
direct loss.
A lot of
if-
direct loss. Yeah.
So you really need to know what you're doing there.
You really need to know what you're doing.
And you're saying with index funds, you put your money and you can watch it grow passively without you.
Without
knowing
without
too
know-
much
not too
about
much
what's going
about it.
on.
Yes.
What then is the difference between then the index funds and the unit trust?
So unit trusts are actively managed funds, are what we call actively managed funds. So someone will go from a company, and then they will go and say, we want to invest in these products, we want to invest in these companies. Then they will buy, so they will collect money from a group of people. So it could be 100 people, it could be 1,000 people, and then they will invest that money on behalf of those people. They buy into this basket. So it's like a stock fail, basically.
For investment.
Yeah, it's like a stock fail. That is what your unit trusts are. And then an index fund is a basket of shares. You can buy you as an individual. You don't need to manage that. You don't need to go and say, let me move my shares from this fund to that fund. As much as you can do that, but it's not actively managed. So being actively managed is that someone will have a target as well to say if it reaches 7%, so it's more or less like on the trading side of things, because if it reaches 7% or 10%, then profits we move from this fund to that fund. Or if that fund is not performing well, or if government bonds of this country are not working well, that's why you would hear things like in the news, investors are moving away from bonds, yes, from certain bonds. They're actively managed. You become a shareholder basically, and you actually qualify to sit even in some AGMs. There's AGMs that, according to the Companies Act, especially in South Africa, I'm going to refer to it to South African context because that's where I am.
Every company has these big meetings where shareholders meet,
and then they will talk about the status of the company. It's like a state, the state of the nation address, where they will talk about how the company performed, what are the projections for the following year, what acquisitions did the company make. So acquisitions, we mean which other companies did they buy? Did they buy new assets to the company? Did they let go of other assets of the company? So basically, an AGM or an annual general meeting is where you would hear of the performance of the company, where they will tell you what the company, how the company performed basically, and what was sold, what was bought.
I'm curious, what gets you into that room? How much of shares do I need to own in a company before I get access to that room?
So it depends on the type of a general meeting. There's general meeting that is available, that is open for everyone. If you buy shares now on Easy Equities, you would get an email or an SMS when the company is doing an annual general meeting. So
is it?
Yes, you can sit in the AGM.
Okay,
Yes.
beautiful.
Yeah.
All right, so you've given me good ideas about what gets you into those rooms, and
Yes.
I think in terms of confidence and mindset, it will work wonders for anyone to be in that room in the first place.
It does.
To know I'm a shareholder and I'm rubbing shoulders
Exactly.
with
Yeah.
the mighty.
It does, man. It does. And one good thing about, and I like what, as much as there's a lot of negative things that COVID brought to us, but there's also good things that it brought to us. The freedom of, or the flexibility of being able to attend things without us being physically there. A lot of companies now have started to have virtual AGMs as well. So they would have a physical AGM, and then they'll also have a link. You just need to register, and you can sit in that AGM.
No, now I want the physical.
You can
for
go
the
to
networking. I'll
definitely
just
can
suit
go
up, get in there and feel important.
Yeah, definitely. I mean, if you want that, that's also possible. And then also maybe just start with the virtual and then go into the physical one, so as you know what to expect as well with the virtual. But that's
No,
the beauty of
it's
it
certainly
as
a
well,
cool
yeah.
thing. I know my reason for being passive with investment and
Yeah.
starting with unit trusts is because I knew I wanted to focus on my work, on this work, on the coaching work and stuff, and not have to go deep into learning about investments and shares and dividends and options and I know there's a nice long learning curve there, so I decided to keep it passive, and it worked.
Yes.
When I started with Unitrust, the growth, it showed me like 3 years later putting money. And one thing it did, I started off putting about 1,000 rands a month, but the discipline builds and you get used to it, and you put 3,000 and you put 5 and you put 6.5. And when I was doing that, I kept adjusting to whatever would be left.
Yes, and you don't need 1,000 actually to begin to start investing. Actually, that's a fun fact.
What do you need? Because I started there after consultation with a financial advisor.
Yes, yeah. So you would.
What's the basic? Because if someone is saying I earn a salary of 5,000 rands, for example,
yes,
can I start? And at what level?
You can start at the level you're comfortable with. You can start with 50 rands a month. You can put away 50 rands a month, like you're saying that.
What are my options for that?
For that, I mean,
easy equities.
Easy equities, because you
can
also
that
buy.
Low.
Yes, even there's shares that are trading in cents. 10 cents, 5 bob.
You have no excuse.
But again,
just say invest something so you can go around saying I'm a shareholder. You can start from 50 rand. That's literally less than it's less than $1, is it?
Yeah, it's less than $1.
Yeah, it is. Yeah, you can start. Life has gotten easier. A lot of people struggle with savings.
They do, and it's because of a mindset.
What do you mean?
Anyone and everyone can save. If our fathers were able to save when they were earning 50 rands a week, and they were able to build houses in the villages, so their mindset was, I'm here in Joburg, I'm going to dig the gold, I'm going to work, and I'm going to
build something for my
family. And I want it as I want, because I have a target. I have a vision that I want to build my children. I want to take my children to school. I want to build my wife and children a beautiful house, a beautiful home. So I'm going to deprive myself of eating nyama inhloko, because I think that was what was
the thing at
the time. It's still a thing. So saving is all about you building the discipline, and you don't have to start with a large amount of money. That's the myth. One of the myths about investing and saving is that when I can save 1,000, then I'll get started. Whereas you can decide to save 10 rands, and there's apps out there as well that have made things easier for us. There's an app called Stash. I think I've heard a lot of people talk about it. I've seen a lot of people recommend it, where you can decide to stash a certain amount of money every day.
How does it work? It connects to your bank.
Yes, it connects to your bank. So you connect to your bank account, and then it just takes money from your bank on a daily basis or weekly. Or
what does the app do with the money? Do I have access as it were in my bank account?
Yes, you have access.
Or you can lock it up for days so that I don't access it immediately.
You can access it, but for you to access it, we have to withdraw. So it's like taking money and putting it on a 32-day notice, and then being able to. But you can withdraw. I think it's the number of days it takes is fewer than 32 days. I think it's less than 32 days. So you can withdraw that money from Stash app, but the motive behind it is encouraging us to save, because once you're able to save, then you'll be able to invest, and you'll be able to invest at the rate you are comfortable with.
Because really that's where for many people the problem starts.
Yes.
They are not able to save to begin with.
Exactly. Yeah.
There's something you said earlier. You said our fathers could build houses saving off very little that they were earning at the time. But that is someone who is saving because they have a goal in mind.
Yes.
What was your goal when you started?
My goal was to leave a legacy for my family. I didn't. Yeah, I guess that was it. And funny enough, around that time, and this is taking me to the next myth that we usually have, is that when I get a lot of money, I'll invest it. Almost everyone you can ask anyone, if you were to get 100 million now, what would you do with it? I'll invest it. If you get 10 million, let it come. And do you know why that happens at that time? It's because we're not prepared to handle those kinds of monies. You don't have the discipline to handle such. As much as I was saving around then, but then I started to see the nice things that I could have, the nice perfumes I could buy. When I won that, I started dreaming, and then I bought one perfume, I bought a jacket, and then where's my money? Can't find my money. I bought a nice 2 terabyte hard drive. A 1 terabyte hard drive. Then it was a big thing when you had a 1 terabyte hard drive. And the next thing, I don't see the money. And then that actually made me realize that if you don't do things consistently, if you don't do certain things consistently, you won't be able to manage large monies when they come through to you. I want to get there. I want to retire at the age of 40. I want to, and by that we don't mean that you're going to retire and watch TV. You'll be bored. I've heard of stories of people that retired and did nothing, and they got bored. Some got obese as well. The people that retired at that age, most of them would do the things that they love. They would go places. They would go teach kids. Go teach kids,
also,
how to do math. They become hobby. They do their hobbies, what they always aspired to do. And another important thing is having as little debt as possible, and none if possible. I know.
Speak to that a bit.
One of the things that took me back was when I first took a credit card. And how I took a credit card is very funny. I went to a bank to upgrade for. I think I was going to change my card. That's when we were still going to the banks to change the cards. And when I got there, and the guy says, "Oh, look, you qualify for a credit card." I'm like, "No, man, I don't need a credit card." And then he says, "No, but you would want to buy a house someday." And I had paid off the car that I was driving, my first car. I was very fortunate. I got a car from someone who had bought it from auction. So and he didn't use that car.
You been fairly disciplined at a young age, man.
And I paid it off. I paid it off in 1 year. I still have it. I love that car. And then after all of that, and then he says, "No, but you've got a car that is paid off, and then you what happens when you need to buy a house?" And then I was convinced. I took the credit card, and then I told myself, "Okay, I'm gonna take the credit card, but then I'll make sure that I will pay it off every month until I couldn't." Because that's what debt does to you. Debt gives you the allowance to hang yourself. Slowly but surely. So
you've given me a line for the workshops.
It gives you like a long rope, and then you keep on rolling yourself, until you can no longer, until it's difficult for you to come out of that. And so that's why I'm saying that it's very important.
That's why many people end up not investing. They were given that rope.
They were given the rope,
and they hung themselves
exactly. And
tight.
How many times have you heard someone going to a bank, going to make a loan of 10,000 rands? They need 10,000 rands urgently, so they want to make a loan. They will be able to pay it back. And then all of a sudden it says, "Oh, look, you qualify for 50,000." Yeah, 50,000.
Brilliant.
And then if you have a car, you start to think, your car rims, or you start thinking about that bag and that cell phone that you've always wanted. And they'll be like, "No, man, I can afford to pay back 50,000. Only to find that you aren't. You can afford to have it. You have an allowance of 50,000 rands, but you don't have the capacity to pay it that back. You don't have, because it wasn't planned. You didn't plan for it. It's like when I buy any big thing for me. If I want to buy a house, I start putting away money that is equivalent to what I'll be paying for that. When I bought the car, then I bought it on credit because I do have a car it's on credit. When I bought that car, I first put away money for 3 months. And I was like, okay, I can afford this car. Then I bought the car. And that is why the reason why I'm stating that, it is because, again, it goes back to what I said earlier. We shouldn't box people into, because maybe driving a nice car might push you to do your dreams more.
Okay.
You know, there's people that are like that. I don't like the thing of saying this is how things must be done. Do this, do that.
Or there are many ways to get to a goal.
To get to a goal. But we must be responsible for it.
Yeah, no, I think where I get consent is when someone, to try and get that nice car, be it for confidence or whatever you set for yourself, they go and buy the one they can't afford.
Exactly, yeah.
And it becomes the situation you were describing, being given that rope and you hang
yourself. Yeah.
Let's talk about risk. There are many people that don't get involved with the stock exchange, with unit trust, with any type of financial investments, be it commodities, bonds, and they say it's too risky. And the stock market is rigged.
Mark Zuckerberg said a very, what is this quotation? He says, the biggest risk is not taking a risk in this ever-changing world. One strategy that is guaranteed to fail is of someone who doesn't take a risk.
Oh, who does nothing?
Yeah. You are guaranteed to fail if you don't take a risk. If you strategize of not taking a risk, you are guaranteed to fail. And the thing is with risk is we only start thinking of risk when we're thinking of things that are going to help us in the long term, or of things where we can't enjoy it then. Very few people think of the risks involved in driving a car to a party. Why is that? It is because we don't think that there's any risks involved. We've assessed the risk.
Back up. You're saying something deep. You're saying people only think of risk when it's stuff that benefits them in the future.
In the future, yes.
And when it's stuff in the present that is satisfying and gives you pleasure, you don't think of any risk.
No.
You
become a risk taker, Mas. I mean, you're gonna be happy, Mas. You love it. It's a nice place. You're gonna be in a good space.
So when it's investing long term, you will try and see all the risks.
All the risks. That is why a lot of people don't see a lot of risks in pyramid schemes.
Because the promise is now.
The promise is now. You're gonna make 30,000 now. You're gonna make 10 times your
that's another nice line. You are giving me gems today.
So
the reason we eliminate risk and have blind spots is because the benefit and the promise is tomorrow you will have 30%.
Yes. That's all it is.
Beautiful. I know this will help someone. What about Forex? What's your experience?
Forex is a beautiful thing. It's a look.
That has dribbled a number of people.
Look, with Forex, it's also again the mindset. If I go to America now, I'll have to change the rand and use the dollar. That is Forex. But if I now expect you, coach, to triple my investment now, that is when the problem becomes. It was a learning curve for me as well. Listen, there's people who are doing it right, who are getting it right. Again, if you follow from the material I've read with Forex is that I think it's 80% psychology and 20% of what you do. So the most part is in your psychology. So like any other thing, like life, you know, if you're going to live, if I were to run now to the freeway, what are my risks of being hit by a car?
So you're saying that risk is equal to investing in Forex?
Investing blindly.
It's just the same.
Yes, it's just the same.
Oh.
The banks also offer Forex investments where you buy a certain currency.
Yeah, you can buy currencies. You can buy and sell.
Buy and sell. They offer you that. So that's again, it's always about managing your risk as well. It was a learning curve for me. Almost stopped me from investing because I got hurt as well. I got bent there.
Also, you're one of those.
I'm one of those. I remember
explain your situation because you are
but-
not coming in completely blind. How did you get dribbled?
I fortunately I didn't get dribbled by someone. I got dribbled by the market itself. I had done everything right. Listen, I had grown my account to 50K. From a very small investment.
You grew it from. Do you remember where you started to get
I
to the
started
50?
to 2,500.
You grew 2,500
Yeah,
to
to
50K
50,000, yes.
without adding anything on
No,
top.
without adding anything on top.
Flip. Hey, ngathi ngizoyiqala iForex.
And do you know what
I'm
killed me?
joking, man. I'm not going there.
You know what killed me?
Yeah.
It was the hope to make more when I should have stopped, and I lost everything.
Even the 2.5.
Even the 2.5, everything. And that's part of other monies that I had lost, because you know when you're doing something you don't understand, there's always this hope that one day I would make it. One day I will make it. It's the same reason why a lot of people who won the lottery, or a lot of people who buy lottery tickets, it's not the people who really make a lot of money. Everyone who buys a lottery ticket, there's this belief that I'm going to make it one day. I'm going to win this one day. And you know, when you have that mindset that I'm going to make it, I will make it big. I will hit the jackpot. That's
how Forex works.
That's how many people approach it. So I think it's an error that I would like to avoid personally. I learned that personally I'm not that good at it.
It's good to be self-aware at that level.
I'd even gone to a point where I would program robots, because I can program, right? So I'll program robots that does the things. Made good money on there.
You program robots?
Yes.
To do your Forex?
Yes, they were trading Forex. And then
and you stopped?
You know why I stopped? Let me tell you why I stopped. Not Brexit. Yeah, Brexit.
Yeah,
when
they're
Britain
coming
was
out of the
pulling
Euro
Union,
Union,
European Union, we were cruising nicely, and then when that happened, all our accounts were wiped. Why? It is also because we have not much control. We didn't have control of what happened in the market. And the good thing about a robot is that it does
the
what it tells
robots
you.
were not told to stop when
they
Brexit.
were not told to. They were told to, hey, if you see it going down, try to add more so that you can recover quickly. So yeah, that's my story for Forex. So I've done it as well. And then I decided
You did it at a more advanced level than I thought. So when you were building up to the 50K, were you using the robots or it was
No,
you?
that was just me.
So you do have some skill.
I do have skills. I do have knowledge. I know, but
here's the warning: if you are watching at home, he has skills. He can program robots, and he's staying away. That should tell you something.
It should tell you something. Only a few can really make it there. And also, just a disclaimer, whatever. I mean, I think we should have done this earlier. But as a disclaimer, whatever I advise,
personal opinion.
It's personal opinion. It's not advice. It's not financial advice. I'm not authorized to.
Yeah, no, you know why I brought you here. It's not because you're a financial advisor. Or anything.
Yes, yeah, definitely.
There is a financial advisor coming next week.
Nice.
An award-winning financial advisor.
Nice
so
one.
we'll do the conversation without disclaimers.
Yeah, so that one will be financial advice because he's licensed to do so. I'm not licensed.
Here, I wanted to know from a young person
Yeah.
who started early, why they started, what their experience has been, and primarily to encourage young people, because sometimes it lands different when you see this young man is in the game and he's doing this thing.
Yeah, and also it's one thing I would like to add as well, or maybe just to give as a warning, is when you do something, there's times where you are investing in shares, for an example, and then you start doing it so well, you start getting better at it, you start getting good at it. Share the information, and be careful of not having pride that I'm the best. You are not the best. There will always be someone better than you. in anything you do, like we're doing now. Someone out there will start with their 50 rands and go and invest, and someone will go and start reading on what ETFs are, and how to start investing, on how to download Easy Equities app. And there's good content on the University of YouTube about Easy
How to
Equities,
start investing.
how to start investing.
Okay. What tools are available for someone once they start? What tools do you think are available to help? You've mentioned Easy Equities.
Yeah.
What options are there in terms of just tools and resources for someone getting started?
There's books on shares. There's
Oh,
a couple
that's
of
an
financial
important
books.
thing
Yes,
to
that's
have.
an important. It's very important to read, and when you read, don't just read novels only. Balance out your reading. So there's YouTube channels that you can watch.
If your goal is to do
If
well
your
in
goal
your
is to do well in
finances,
finances, there's a lot of people that have got great content. People that I look to, the people that I follow, people that actually even helped me during 2020, because I think I came back mostly in 2020, my investing. That's when I came back, and I've been consistent from there.
so you invest every month,
I invest every month.
and your investment, is it diversified, or you buy shares and you put money into index funds?
My current goal is to max out my TFSA. There's an account called the TFSA, tax-free savings account.
Okay.
South African government gives you an allowance of up to 36,000, if I'm not mistaken,
Per year, yeah.
per year, that you can invest.
That I
in.
know from my unit
Yes.
trust.
Exactly. So you can invest, and that is tax-free. That will not be taxed when withdraw from that, and when you withdraw after when you retire. Because that's important to put that as a disclaimer. I know there's when you speak of withdrawals, I think it's one word that really makes people excited. One way to build, or one way to being able to afford to buy a house is through debt. If it happens that you are building your credit score, because we always speak of the credit score, one of the ways that I used was I had a card, my clothing card. So in that card, I made sure that I only use it when I have cash. I want to buy jeans for 500 rands. I'll have 500 rands. I will go and use my card, swipe it. The following day, I pay that 500 rands.
And you build your score.
That's
that
how I
way.
build my score. That's how I built my score. And that was the intention with the credit card as well. But then it got out of hand. And the reason why...
Wait, I'm curious about that, because I've got a credit card trauma story as well. I needed some therapy to get out of the problems I got myself into. Do you remember how much money they gave you? The maximum limit that took you out?
At first, it was 10,000 rands. And then you get a better salary, and then they're like, you now qualify for 30K, and you now qualify for 50K, and then it feels good. Feels good when you qualify for 50,000 rand in your account, and I don't know, for some reason when they call you and say, look, your credit card, you qualify, we can take the limits up. It became even worse when they allowed you to adjust it yourself, where you just go on the app and then you say,
That's what happened to me.
Yeah, and then it'd be like,
And I didn't have your thing, because I wasn't, I like my things passive. I don't like going to the bank.
Exactly.
So it came in message on the app, 220 pre-approved credit card limit can increase. Do you accept?
Yes. You see yes only. Yes and yes.
Yes
or yes.
I didn't even, at the time, I wasn't even reading what followed after. They start popping terms and conditions, and you just accept.
What terms and conditions? What terms and conditions?
What
are those? I think even the people that write those...
I think in less than 3 months, I cleared out the entire thing, and I couldn't account for where the money had gone for most of it.
And then
that's my upload story. And then the interest became a reality. And I think one of the people that really helped me is content Dave Ramsey, when he talks about steps. Getting out of debt. I needed to go down back to the fundamentals.
Yes, and
to
the
get out of that situation. For a lot of young people, they're getting themselves in trouble through these things. Buying cars they don't afford. And when you get given a high credit card limit, and because the problem is when they're saying pay this amount, Sometimes it's like 3% of the balance.
Of the balance, yes.
And you don't realize that as long as you're paying that minimum,
The interest.
the interest gets you so much that it takes you 10 to, in some instances, 20 years to pay it off if you're just paying the minimum.
The minimum. And that interest is high. It's not low.
It is not child's play.
It is high. So that is why my philosophy is that stay away from debt. Stay away from debt. You will get there.
Mine is still that, but where I go is stay away from it if you don't know how to use it, and many people don't.
That's also fair.
Because it's a tool that a lot of people have used for wealth creation, but the people that do use it well use it for investment.
Can I tell you a fun fact?
Yeah.
In 2020, a friend of mine, he says to me, "Sasol shares are 30 rands. You can even make a loan. You'll be a millionaire.
Evan,
Make a loan and go in 100,000."
and you did.
I did not.
That's I'm thinking you're about to go to a nice juicy place here.
I did not. Why? You know why? As much as I understand that some people used credit to build, companies do that a lot. We can't dispute that. But they do that with projections and they have some sort of insurance. Because if I had taken that 100,000, let's say I took 100,000 and then I invested it, and then I got retrenched last year, how was I going to pay it back?
And sometimes you don't factor in things like that.
Exactly. You don't factor in things. I don't have control over that.
It might not even be you get retrenched. The work environment might get nasty.
Yes.
Or interest rates might go up.
Like they did.
As they did. Since COVID. There's a lot of people in pain right now.
A lot are in pain. And it's because, and also it's always good. That is why it's always good to listen to other people, but also do your own.
But wait, if someone was coming to you with Sasol shares and they were that cheap and the potential for the upside was clearly going to be more than the interest that you're going to pay, what stopped you? I'm curious. Because
it's
the maths probably was making sense.
It's the fact that there will always be opportunities.
Oh, so you look at it that way.
Yes,
Okay.
there will always be an opportunity. If I missed this opportunity, there will always be another opportunity. It might not be Sasol again, but I'll find another opportunity, because I believe that opportunities present themselves, and when you take an opportunity, you must take it with confidence and be able to withstand any risks that come with that.
What makes you withstand the temptation? But
discipline.
Where does it come from for you? Do you remember where in your life?
Consistently telling myself that one day I'll be able to save enough to build a portfolio of 100 million. One day I'll be able to build a portfolio of 10 million rands. That is a discipline that I have, is that I may not be able to do it now, but with the baby steps that I'm taking, at least I'm safe when it comes to if anything drastic were to happen, I won't get a heart attack.
Okay. Do you have mentors?
I do.
In this space?
I do have a mentor. He's on Facebook as well. I think many have heard of him. Refile Bogatsu is one of my mentors in the investing space. And funny enough, he also invests in equities. And how he approached it was, the service that I'm going to invest in, or the equity that I'm going to invest in, the single company that I'll invest in, am I using their products? If I'm investing in Investec, am I banking with Investec? How am I benefiting from investing in Investec? How am I benefiting from investing in ShopRite or Woolworths? Wherever I buy my groceries, if there is a possibility of me investing there, then that's something I can look into. But
so buying from there becomes less painful.
It becomes less painful because you are circulating your own money.
That's beautiful. And one of the things that people don't do when they get into the investment spaces, educate themselves. But for you, how does that look like? How are you constantly developing yourself?
It is to tell myself that I do not know anything about investing. What I know is
Not enough.
not enough, and will never be enough. So, and that pushes me to go and listen to podcasts, read books, read articles, follow investment news. There's a website called Sense, SENS, I think, yeah, SENS. They have data on companies. So almost all companies report to that with their financials, when are they going to issue their dividends and all of those things. So basically, as long as they're in the JSE, they have to report to SENS. So reading and exposing myself and having conversations as well. You know, at times you hear someone talking about investing in shares or investing in general, and then you just listen.
You've talked about your mentor, and
Yes.
I think that's some beautiful lessons that you're picking up from him.
Yeah.
When you look at your childhood, are there other people that taught you though this kind of discipline? Is it a family thing, or it's just books?
It's a combination of both. My father was big on cash. He always aimed to buy everything cash as much as he possibly could. I come from a family that values money. He once told me one of the important things that I needed to learn about was money. I needed to learn how to manage my money, and if I managed it well, then I would be unstoppable.
Okay.
Yeah. So, and then there's books. I've read Rich Dad Poor Dad. I've read, funny enough, I've also read books that are not related to money, but that really gave me control of myself.
Do you remember some of them?
Yes, by Robin Sharma,
Okay.
A Leader Without a Title. And that's the first book I actually finished reading, because I would read books and
Not
I would
finish.
and not finish. I remember when I finished that book and I went back to it again. I was like, yes, this is the book to read. Being able to lead yourself without needing a special title. That really gave me a good kick in self-development as well.
That
Actually.
does shape your mindset to just
yeah.
vision thinking
Yeah,
and breaking it down
definitely it does.
to
They help
why
you.
you do things the way you do them.
Why are we sitting here? Why are you and I sitting here today? Why did
I
you
can
invite
tell
me
you
to
one
the
of the simple
podcast?
reasons. It's like I told Witness, these days, you know what I've discovered with podcasting?
Yeah,
I could randomly think about my life and say, what do I want to add next?
true.
And then just throw a podcast
See,
and bring you here.
exactly.
And I'll be thinking, all right, so I've done passive investments now, I want to step it up to shares.
yes,
And sometimes it's initiated by clients asking the question, why don't you at some point bring someone who can talk about this? Because we want to invest, we don't know how to start.
exactly. Yeah.
And then I think, who do I know who's already doing it?
And by the way, shares can be passive as well. If you get 10 million and put it into shares, and then you get dividends, that could be the passive way
Could
of doing
be,
it.
could be.
Could
but
be,
you
yeah.
you mentioned the whole element of you need to watch them a bit closer
Yes.
than unit trusts and index
True.
funds.
True.
So when there's that involved, and I know I'm not going to have the time to be watching over them that closely, but I like what you're saying, that
Yeah.
they can be a passive
Yes,
investment.
they
And
can.
a lot of people talk about have passive income streams and don't realize shares, index
be.
funds, unit
Yes,
trusts,
yes.
stocks, bonds, that can be passive investments.
They can.
And they can give you passive income.
True, they can. And when we look at passive income, we usually look at the money we get now. I think that's another thing that we might need to look at.
Okay, take it to the level that
so-
I can see you want
so-
to take it to.
The level that I want to take it to is passive income might actually not be for now. So there's passive income that will be useful for you when you retire. For an example, when you retire, when you invest into an RA, a retirement annuity, when you retire, you invest in the pension portfolio. The goal is to have money when you retire, so that you get money every month. That is passive income. It's coming to you.
There's an element that I thought you'd pick up there. And I like that you're saying you invest long term, and by the time you're withdrawing, you've got money coming passively.
Yes.
And for the rest of your life, pretty much, for many people.
That's also, yeah.
But what I was thinking was, actually, when you're investing money into these facilities and into stocks and bonds, capital gains is income.
Yes, it is income.
And interest coming that you don't withdraw, it's still income. So it doesn't mean that because you're not receiving it, it's not happening and it's not growing.
Exactly.
So your money is growing
my
passively.
Dividends, my capital gains. When you need to get to a point where you tell yourself, I don't have a car I want to drive now. I don't live in a house I want to live in now. But I also won't abuse the leverage I have of my age, because I know by the time I'm 50, by the time I'm 60, I'll be in a very bad, in a way better position than if I had taken out that 1,000 rand of dividend that came, that 1,000 rand of a dividend that came back.
All right, so let me put you on the spot as we close.
Yeah.
We've been talking about young people a lot.
Yeah.
And you just mentioned if you had started early and now you're 50, you've got access to a life that you want to live.
Yes.
What would you say, and I want a young person to advise our elderly who didn't start?
Start now.
Now they're 50.
They usually say, in the African culture, it's difficult advising older people. But I would say, start now. Do it for your kids. Because the goal of investing is also to not to do it for yourself. I mean, even if you read the Bible, if you're someone who reads the Bible says that a man who invests for their kids and their fourth generation.
A good man.
Yeah, a good man. Yes, a good man invests for his kids and his fourth generation. So be a good man, be a good parent. That 10,000 rand you left for your kids, if they treat it right, it would become 100,000, 200,000. So there's this company, a mining company that grew drastically. I think they listed in 2020 as well, because 2020 was a good year for shares, for investing. And this company did very well, and they started dishing out dividends. And a lot of people flocked, we're making so many dividends. And then a few years later, because it was basically, I would say, FOMO for most people, that they were, fear of missing out. They didn't want to miss out on this gravy train that was happening. They started investing, and they invested at a very late stage. And share price started going down because the demand for coal started going down. There's that color, the share price is
you
red.
mentioned the colors.
Yeah, the colors, it's red, so it's no longer green. So it's very important to be patient. Have your own set of rules before you buy into any basket, any share, any ETF, anything in life. Have your own rules. The rules that when things, or if things were to go wrong, you can say, I tried, and I'm comfortable with my decision, and I've paid my school fees. That is very important for me, to own, make a decision that you can own. Don't say, no, coach told me to do this. So it must be, I made the decision, and if it goes right, yay. If it doesn't go right, I go back to the drawing board. Where did I go wrong?
Got you.
Yes.
Beautiful, man. Beautiful. And thank you so much for sharing so much value. This has been a beautiful conversation. And I hope you benefited to the point that you've got a friend, you've got an aunt, you've got an uncle somewhere that you would love to share this information with. So remember to click that like button, share the episode with them. I want people to start investing. I want people to start building a culture of savings, to start getting back on that journey of financial independence. And if this becomes your first step, It's job done from me and from Musfa. Otherwise, see you in the next episode.